Hillier, the Chief Investment Officer for Liverpool Victoria Asset Management, is here with us. Thanks very much for coming in. So, first of all, you seem to have a preference for corporate bonds versus government bonds. Why is that?
Essentially, it's the yield that's available to you today. We don't think that government bonds, particularly UK government bonds, offer you an attractive risk-reward profile. I think corporates still, the underlying cash flows are good. Corporate balance sheets actually have been pretty good shape through this economic downturn. And so the easy money has been had in the corporate space. Let's be absolutely crystal clear about that. But we're starting to actually see, given the recent pullback in equities, that our affinity probably in that area is starting to improve again. We were very aggressive last year, and we took some of the exposure off at the end of last year, and the pullback maybe provides us an opportunity to reload the gun.
Well, so then if you are underweight in government bonds right now, do you think there is still a risk of governments in developed markets defaulting, and if so, where?
It's not a default risk that we're worried about. It's actually just the straight return that you're getting. If you're thinking about why you buy a government bond, you're looking for it from an income perspective. We just don't see short-dated government bonds offering you a great attraction at this point in time.
Well, to equity markets, you think they're fair value. We've had a bit of a gut check. We've had 6 days of gains. Does this continue now?
Well, I think really we said in our Outlook piece that we sent through to you in advance of this interview that our big thing was what comes through in the Q1 and this reporting season, and it'll set you up for where we see the rest of the year going. And I think we've been pleasantly surprised by earnings.
Sheets. Okay, no, are we getting top line, though, generally speaking, now?
I think we're starting to see some improvement. I mean, I think you forget that, the earnings is the underlying thing. That's the thing that pays the bills. That's the thing that pays the dividends. Yes, I'd love some top line too, and I think we'll start to see that come through as some of the investment cycle starts to kick back in again. And that's the story for 2010, is the reinvestment cycle. We've done the cost cutting, the discipline thing in 2009. We've had the classic recovery. I think quality
you've got to be betting, Piers, on an economic recovery being more sure-footed.
We think we're showing those steady signs. There are going to be some wobbles along the way. Greece gives you a classic indication that we're not out of the woods by any stretch of the imagination. But our gut feel really is the fact that from a corporate point of view, the discipline was there through the cycle. Its top line is going to be an important thing for 2010. Our emphasis away from sort of recovery cyclicals into quality, I think, is where we'll get better. So our focus now, return on equity, return on assets, is the classic character for equities this year.
And there is still a great deal of political uncertainty. In the UK, we have the upcoming general election, and indeed in Europe, as we've been saying, mounting budget deficits in Greece, Portugal, Spain. How is all that impacting on your investment strategy?
Well, you're absolutely right. The election in the UK is important because normally after an election you see some form of fiscal change. We saw quite a lot of change when Labour won power in 1997. We moved to an independent Bank of England. We saw the controls from Bank of England over banks moving to the FSA, and we also saw the removal of the tax credit on dividends to pension funds, and that structurally changed the pension fund industry. We've seen pension funds been net sellers in the UK stock market for 13 consecutive years. So I don't know what Mr Cameron's going to do. I'm not going to tell you he's going to put VAT up to 20% or anything like that, but we will watch very carefully, and that will provide some very good yardsticks as to where we go in the medium term. And I think that's what our real emphasis is, that there will be opportunities for active managers after the election to readjust to those scenarios.
Piers Hillier, thanks very much.
Pleasure.